Good morning, trading world. It is March 22nd, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. The title for today's outlook: Looking Back Through Pre-Market Past to See Pre-Market Future. Just kind of going back because a lot of things that I said in past pre-markets are coming to fruition. Let's start by going back to a quote from the pre-market video on 3/9/22, and it goes as follows: until we break out the lower end 395 or the top end projected at 455, we are still in consolidation. So therefore, we could have these large rallies that don't mean anything. All right, from that one, I projected the top end of the range is going to be about 455. So until we break out above 455, we are still in consolidation. The next quote is from a pre-market video on March 11, 2022. And the quote is as follows: VIX gets crushed down to the low 20s or back into the teens. We have some time and are likely to continue higher to the top of the consolidation range, where we could get comfortable for a while. Remember, this consolidation is happening on your larger time frames, monthly and weekly, but the volatility speeds things up. Moves that usually happen over a month's time are now happening at a week's pace, and moves that are usually happening at a week's pace are almost playing out in a day or two. The drop in volatility will slow this down as well, but it doesn't mean that we are back to our regularly scheduled bull market at all. Now, reading through all of this and where we are in the market now puts me in mind of, I always use these analogies of the market being a runner. So we're going to stay with that. If you've ever seen a sprinter train where they do the resistance training and they have this bungee cord vest tied to them where it puts tension on their run, that's kind of how I see the market right now. They start running, but as the bungee cord is stretched out, the more tension is put on the runner, making it harder to run until they max out and have to stop. This is where we are in the market. The interest rates are the bungee cord. Sure, we seem to be running forward now, but I feel the tension. Here's some evidence of the tension in bungee cord. It is common knowledge that when the yield curve inverts, that a recession is near. Some people watch the 2-year and 5-year or the 2-year and 10-year, but that's not important. What is important is that we already have entries that are starting to invert. So let me see if I can get a drawing tool up here for us. All right. Now, when they say invert, usually the yield curve goes from least to greatest. The further out in time, the more the interest rate should be. And what happens, things that predict a recession, is when the yield curve inverts and we don't go from least to greatest. We start having higher interest rates in lower time frames than we have further out in time. So something that you can see right here, the 3 year is at 2.34 and the 5 year is 2.33. That is an inversion. It may not be what everybody wants to see, you know, watching the 2 year and 5 year or the 2 year and 10 year, but this is a start. This just tells me that it is coming. It is on the way. And if you watch the talking heads, nobody's going to say anything about this until the main one gets here, until somebody, the one that they watch, whether it's the 2 year and 5 year or 2 year and 10 year, they're not going to say anything until that happens. But this is just that early warning that it is on the way. So I thought that was interesting, and I just wanted to pass that on and show you. And I don't know what people think, that it just bam magically happens. We invert, the 2 year and the 5 year just automatically happen. It doesn't happen that way. There's a gradualness to these things as it happens. So this is a part of that gradualness I just wanted to point out. So that's where we are. And that's what is happening right now. It's only a matter of time before we feel the full tension of that rope and we have to stop. With that being said, let me get to the key levels of the day. All right, here we are with the key levels of the day, starting on the resistance side. We have our jack resistance at the 446 to 447 area, the queen resistance at the 448 to 449 area, and the king resistance at the 450 to 452 area. On the support side, we have jack support at 444 to 443 area. Queen support is at the 442 to 441 area, and king support is at the 449 down to the 435 area. The main thesis for today is bullish, closing above the 444.39 with a projected high or target of about 447 to 451. The alternate thesis is bearish, closing below 444.39 with a projected low or target of 443 down to 439. Based on the chart time frame in control, being the daily, the higher we reach in the range, the harder it will be to hold on to these gains. Feel the tension in the bungee cord picking up as we get higher in this range. The current channel we are in, the main channel, goes all the way down to 425 and is up to 453. With the minor channel being 443 to 453. Give me a moment to bring up the scenarios of the day. All right, the first scenario we have is our expansive range day structure. We could look to set a decision area, upper boundary around the jack or queen resistance area before chopping lower and then giving it another try to push those boundaries higher. And then at some point later in the day, we could fall back toward basically the opening range. So that's pretty much what I see as far as the range day scenario. We could have a vice versa. It could start down first, then go up. That is something that could happen, so be on the lookout for that as well. But the overall thing is expansive range day. And at some point, these are not even going to be expansive range day. They're just going to be regular range days as we see VIX kind of shrink back down or get crushed back down into the low 20s and back into the teens. Let me bring up the next scenario. The next scenario we could have could be our trend day up structure, which means we open gap up and start with a fade back toward the previous close. I just want to point out that the difference between the trend day up and the expansive range day is going to lie where this blue line lies, which is the previous close for yesterday. If it is a trend day, we should hold this as support. We shouldn't get a big close below yesterday's close. But what differentiates it into that expansive range day is that we get some closes below yesterday's close. So if we get some decent sized bars below this, that just kind of wipes it and makes it an expansive range day. All right, but back to the current scenario. In our trend day up model, we open gap up, start with a small fade back toward the previous close where we should find support on or before that previous close, and then reverse, and that's where we find our strongest trend of the morning right here, usually between that 9:45 and maybe 11:45 time frame. Some people call it the golden window. But we find that, and this is going to be the best time to trade, or where your best trades of the day are going to come. We find our midday chop around our either queen or king resistance area. Second part of the day starts with a head fake, looking to continue the strong trend of the morning, but we get a fade going back into the close, taking us back toward the open. That's scenario number 2. I'm not mentioning much about the probabilities because they are so jumbled up. You have to be prepared for all of these scenarios today. Let me bring up the last scenario. All right, our last scenario is pretty much our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and find midday chop around either the queen or king support area before going into the second half of the day and going back up with the same amount of force that we came down with in the morning. So that's the rounded reversal day type. Also be on the lookout for the vice versa version of this, which if somehow we find support before the opening and we're able to build some momentum, we could see something like this happen, which is the vice versa version of the rounded reversal day structure, which just means that we, instead of going down first, we go up first, find our midday chop around the queen, possibly the king resistance area, before using the same amount of energy or force that we rolled up with, we ride down with the same amount of force. So those are the scenarios to be on the lookout for today. I hope this helps. Always understand and know your risk with each position that we put on. Right now, I just have that feel that we're on a treadmill. We're not going anywhere very fast right now. We're basically going to, it's going to be a hard fought battle to gain the upper end of the range. Maybe I should say it shouldn't be a hard fought battle to gain it, but it's going to be very hard to keep it or to stay at those levels. So this is setting up to what I think is going to be a ultimate great short here in the next week or so coming. So still have to be on guard as far as knowing your risk. That is a given in trading. And with that, again, I hope this helps. And as always, wishing you a positive trading day. Have a great one.